When a country's currency shows a weakening trend, some people see it as a challenge, while others sees it as a potential opportunity, one of which is through investment in the form of foreign exchange or forex. This phenomenon is quite common, but it is important to understand the intricacies before deciding to enter this forex investment. Watch this video to the end so that you really understand how to invest forex and get optimal returns. The main attraction of foreign exchange investment is when a currency weakens, where the attraction lies in the potential profit from the exchange rate, capital gain. The logic is simple: investors buy foreign currencies when they are considered relatively cheap against a local currency, in the hope that the value of the foreign currency will strengthen in the future, or the local currency will continue to weaken. When the exchange rate moves as expected, the investor can resell his forex at a higher local currency value than when buying. It doesn't sound like it's nationalistic, because if we invest in foreign exchange, we expect the local currency to continue to weaken. But this is only because we take advantage of opportunities from foreign exchange investment, not us who deliberately drop a local currency. There are several advantages that make this foreign exchange investment increasingly looked at by investors from various circles. 1. Asset diversification. Foreign currency investing allows you to spread your risk beyond other investment instruments such as stocks or property. By owning assets in the form of foreign currency, you are not only dependent on the movement of the domestic market. This gives a wider space to manage portfolios, especially amid uncertain economic situations. 2. Potential profit from exchange rate fluctuations. One of the main attractions of this investment is the potential profit that comes from exchange rate movements. You can profit when the value of the currency you buy is rising, or even when the market is falling, as long as your strategy is right. This flexibility gives you more room to make a profit than other instruments. 3. High liquidity. The foreign exchange market operates almost 24 hours during the weekday and has a huge volume of transactions. This means that you can buy or sell currencies at any time without having to wait for a long time. This ease of access is a plus, especially for investors who need high flexibility in fund management. 4. Access to dynamic global markets. By investing in foreign currencies, you can take advantage of the economic growth of other countries. This opens the door to a wider global market, while also providing the option to tailor investment strategies according to international economic conditions. For investors looking to expand their reach, forex investment is a strategic choice. In addition to the potential benefits, every investment must have risks. It is important that you understand what challenges you may face, so that you can make decisions more wisely and planned. Here are some of the key risks in forex investing that you need to be aware of. 1. Exchange rate fluctuations. Rapid and unexpected changes in the exchange rate can have a direct impact on the results of your investment. Without a good understanding of the market driving factors, losses can occur. For example, buying the United States dollar when the exchange rate against the local currency is high and selling it when the United States dollar is falling will result in immediate losses. 2. Geopolitical risk. A country's political situation, international conflicts, or economic policies can have a major impact on its exchange rate. Sudden changes in government or economic sanctions can create market instability that is difficult to predict. 3. Market competition. The forex market involves big players such as banks, global financial institutions, and professional speculators. This high competition can make it difficult for novice investors to earn consistent profits without a clear strategy and sufficient experience. If you are interested in starting forex investing or you just want to keep funds in the form of foreign exchange, there are a few common ways to do it. 1. Buying physical foreign exchange. The most conventional way is to buy foreign banknotes at banks or money changers, licensed foreign exchange traders. The advantage is that you hold the asset directly. 2. Many banks offer savings or current account products in popular foreign currencies such as USD, SGD, EUR, or JPY. It is safer and more practical than storing large amounts of physical money. 3. Trading forex through online platforms. This is a more sophisticated and high-risk way, where individuals can speculate on the movement of currency pairs, for example USD to JPY, or EUR to USD, through online brokerage platforms. For those of you who are just starting out in forex investing or you are still a beginner, I do not recommend forex trading. Forex trading is somewhat different from forex investment because forex trading is short-term oriented and tends to speculate. In investing in forex, there are several important things that you must pay attention to, namely, 1. Determine the currency you want to invest. Choose a stable, liquid currency, such as USD, US dollar, euro, or JPY, Japanese yen. You can also consider other factors such as the economic growth of your home country, trade relations with your country, and political stability. Choosing the right currency will greatly affect the outcome of your investment going forward. 2. Pay attention to the best time to buy and store. The value of currencies fluctuates all the time. For this reason, you need to pay attention to when is the right time to buy, and when it is better to save or sell. For example, when the exchange rate of a particular foreign currency is weakening against the local currency, this can be a buying opportunity. You can also take advantage of technical analysis or follow global economic news to help determine the right time. 3. Do a simulation or small investment first. Rather than directly putting in large capital, it would be wise to start with a small amount first. You can try out the simulation on a demo account if you're using a Forex platform, or buy a limited amount of Forex to test for some time. This helps you understand the market dynamics without taking on huge risks at the beginning. Foreign currency investment does promise potential profits, but it still requires a mature strategy so as not to be trapped by risks. For this reason, there are several basic principles that you need to pay attention to so that investments can run safely. 4. Use idle funds. Idle funds are funds that are not intended for basic and emergency needs. Ideally, investment funds come from excess income that is ready to be invested in the medium to long term. By using idle funds, you can have more peace of mind when facing market fluctuations. 5. Avoid short-term speculation. The temptation to make a quick profit often leaves investors trapped in short-term speculation. In fact, without a deep understanding and the right strategy, this step can actually lead to losses. It's wiser if you prioritize analysis and a structured long-term approach. 6. Follow economic developments and global news. Currency exchange rates are highly sensitive to economic, geopolitical, and international news changes. As an investor, it is important to keep an eye on global trends and issues that can affect the Forex market. You don't need to be an economist, but just understand the context and its impact on the currency you own. 7. Diversification of currency types. Don't just focus on one foreign currency. Diversifying into some stable, liquid foreign currencies, such as USD, EUR, or JPY, can be a smart move to reduce risk. When one foreign currency weakens, you still have the odds of the other. If you are interested in investing in Forex, here are 9 of our recommended foreign currency options that you can include in your investment portfolio. These 9 foreign currencies have proven to be stable and provide optimal profits. 1. Singapore Dollar, SGD. SGD is often used as a reference currency in the Southeast Asian region. Singapore's economic stability and strong trade relations with various countries are supporting factors. 2. United States Dollar, USD. As the world's reserve currency, the USD has always been the top choice for foreign exchange investments. Its high stability and high liquidity make it an effective hedging instrument, especially in the midst of the current trade war conditions. The position of the USD is expected to strengthen against several other currencies. 3. Australian Dollar, AUD. AUD is heavily influenced by commodity prices, especially minerals and energy. That said, AUD remains an attractive option for investors looking for portfolio diversification. 4. Kuwaiti Dinar, KWD. The KWD is also a very strong currency. Abundant oil reserves and prudent monetary policy are key factors. 5. Euro, EUR. As the single currency of the European Union, the euro also has a strong position for foreign exchange investments. Its influence on the global economy is quite large, so the exchange rate movements need to be considered. 6. British Pound, GBP. Although Brexit has had an impact on the UK economy, GBP remains an attractive currency to invest in. The UK's position as a global financial center and a world economic power is a supporting factor. 7. Omani Rial, OMR. OMR is known as one of the strongest currencies in the world. Oman's economic stability and large oil reserves are factors that support its exchange rate. 8. Japanese Yen, JPY. JPY is often used as a safe haven asset when there is uncertainty in the global market. However, its low exchange rate against the USD makes investors need to consider the right strategy. 9. Swiss franc, CHF. Just like the Japanese yen, the Swiss franc is also known as a safe haven because of its strong Swiss financial position and being one of the world's financial centers. Those are the 9 prospective foreign currencies that we recommend as a means of foreign exchange investment. Thus our discussion of investment in foreign exchange. Hopefully it will be useful and hopefully your investment will get optimal results. Share this video so that more people understand about foreign exchange investment. Thank you for watching this video until the end and see you again in our other videos.